You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host. As always, this week we've got the man in the studio again. Everyone listens to this guy more than any other episode in the year. Brendo, thanks for coming back in the studio.
Trent, thanks for having me. Great to be here.
And you're here with your very cool son, Liam, who's in the background. Hello, Liam.
Bit of school holiday kid wrangling going on. So
well, I'm sure a lot of people listening would understand that.
Absolutely. And Liam wanted to see some professional podcasters.
He's in the right place then, clearly. Mate, it might be some holiday time and break for a lot of people over this fortnight, but certainly the Perth market is smashing on its selling season, isn't it? Spring selling season.
Yeah, really interesting moment in time here in the market. We're seeing an uplift in listings in REWA for the first time. We'll talk about that in a moment. Mm-hmm. But from what we're seeing from a transaction point of view, a pause and hold. It's feeling like it's a rugby scrum here. We are ready to engage into spring. The vendors are out there, the agents are out there, they're getting ready. But spring, in terms of selling season, hasn't quite sprung. And so we're just seeing some data that says essentially listings going up without the buy side, as in purchases going up. That's the first time that's happened in a year or two in the spring side of things. And there's a few other different motivations which we can also talk about in terms of why people might be bringing their properties to the market. But in terms of timing, we're right at that cusp of sporting finals, so AFL, NRL, and we've just alluded to it, everyone's on a little bit of pause because school holidays is right in this section of
going down south,
the year.
Going up north.
Exactly.
It's that small holiday that everyone takes with the kids,
I
think.
Yeah, exactly.
And let's talk to the dynamics of what's happening right now. As you said, the last 4 weeks is the first time we've seen in 5 years the number of properties on the market be slightly more than they were the week and the month before, rather than slightly less. So we've gone from 2019, 17,000 properties, progressively in a linear nature, bar Christmas, for the last 5 years up until May, from 17,000 through the balanced market of 13,000, 10,000, 8,000, 5,000 every Christmas, down to 3,200 properties in May this year.
Yep.
It then plateaued over May, June, July, August, around the 3,300. And what it looks like is we found a natural zero of how many properties minimum you can have in the market at any point in time, given we're transacting on essentially between 850 and 950 properties every week.
Yep.
A quarter of the properties, as we know, have been taken off the market every week.
Yes.
And this is probably the first time we're really flagging this on this podcast, is that over the last month, every week, we're progressively seeing about 150 properties more come on the market. So we're going from 3,200 to the first time since about February, I think, we've breached 4,000.
Yes.
So it went from 5,000 properties at Christmas down to 4,000, down to 3,200. We're back up to 4,000. A year ago was 5,000. So if we look at it, and I said this, I think, on the podcast with Tim Reardon a couple of weeks ago, we've gone from 240 degrees maximum in the oven to probably 235 degrees.
Yeah. And
what does it say about the market right now, Brendon? Because in any sense, if we were back in February, 4,000 properties in the market, that was the record low we ever had.
Yeah.
It's still very much, this year is the record low properties we've had this year.
Yeah.
But the direction is just tipping back, relieving a little bit to a point where I think we have our normal spring selling season, as you said, where we have more people selling.
Yep.
But for the first time in 5 years, that buyer pool, still above mining boom levels, just hasn't tracked up with it over the last 3 or 4 weeks. What's happening there?
Yeah, so I think a little bit of a pause in the market here in terms of the buy side. So if we have a look at those numbers quickly, we've dropped away from, here's a really good stat in terms of activity at this time pre-spring or start of spring last year, 950 sales for the week. This year, that same week is essentially just over 800, 820. So that's a fairly significant drop.
Which is flat, really, with the last couple of months.
Yeah.
It hasn't picked up in the same way the selling pressure is picked up as it normally would in spring.
Yeah, and so just one more bit of perspective there. 4 weeks ago, there was 770 sales. So we actually are having our little spring bounce in terms of activity. It's just that we're not the same as we were year on year. The other thing is there's a few people looking around, a few other experts outside of our scope here saying, oh, hang on, Perth's off the boil. That's it. The run's gone, all that kind of stuff.
A couple of Melbourne commentators.
Fairly
then push Melbourne in the same video.
Exactly. And so we just need to be careful here that we're coming off absolute peak market conditions and we're only taking a small step back from that. If you talk percentages, the numbers can also look really large, but let's again get a little bit of perspective around house listings. So we've been talking for a really long time about 2,000 to 2,100 houses being on the market in a city of 2.3 million people. It's a completely ridiculous scenario. And as you've seen in my presentations, mate, I've got the Woolworths shelf bare of any product. That's still what our market looks like. We're just getting a little bit of restocking going on.
A couple of bags of oats
Yeah, exactly.
have been left on the bench this time.
Essential items coming back to the shelf, maybe some milk in the fridge. So essentially, if you look at this percentage, we've gone up to just under 2,500 houses on the market. So there's a 20% leap there. Let's go back to the spring selling season situation and let's just get that perspective again in terms of long-term averages. If we're in a normal equilibrium style market that Rewa talks about with their long-term average numbers, the number of houses on the market should be somewhere between 8 and 10,000 properties. And we're only down at 2,500. So again, I think what happens here next is that people start looking around, i.e. they start to see some for sale signs in their street. They start to see the properties that they desire, i.e. they may have been sitting on their property that got a good equity position, they've been paying down debt since COVID. We've actually been in a really good market in terms of value growth. Some houses in Perth will have gone up by 50% since COVID, essentially.
Some have doubled.
Exactly. To go from one suburb to another. If we think again about some of my presentations, those Baldivis examples we've got there, a number of properties gone up by 90% in the last 4 years. And so what starts to happen in this market now is as supply comes, those people, those upgrade buyers, those people that have created equity and wealth for themselves start looking around and saying, okay, hang on, what am I going to do? Am I staying in this suburb? Kind of always thought I was on the wrong side of the tracks. Can I get to the slightly better suburb? Can I get closer to the coast, closer to the park, closer to the cafe strip? All of those desires that they have in life and start making those moves. So really where I'm getting to here is I'm not really that concerned about the listings going up slightly because I think the demand side of things will follow for some pretty decent fundamental reasons.
I'm likening it to, if you're in a manual car,
Yes.
We've come out of first gear a couple of years ago. We've been in second gear.
Yep.
As you transition into third gear, slight momentary pause to get it into gear.
Yes.
That's where I reckon we're at right now. Transitioning between second gear, we finally have some equity to actually get the revs going again into third gear and start moving to that next chapter of where we are in this cycle in Perth.
Yeah.
We're not tipping off the back of fourth. Don't even talk about it, guys.
No.
We are literally coming out of second, taking it a second to think, hang on a sec, what am I doing with my equity now? Probably having a few East Coast investors not here that were last year, so we can actually participate in the game as well.
Absolutely.
And then it will be third gear, and I think that third gear, if it isn't starting in the next few weeks, 100% it is starting when rates drop.
Yep. So one of the other things, and you just mentioned it there, that I wanted to pick up on is the East Coast investor activity. So it's really driven our market really hard since January, the start of this year. I would expect that those numbers are going down at this point in time in terms of their activity. Why? Because of our values have increased. And so essentially the people that are leading those investors, the buyer agents, are starting to look for other opportunities.
More convenient opportunities that are closer to home.
Yep, and some more affordable ones. So we can talk about it in the regional podcast, but essentially we're seeing a fair bit of activity in a couple of regional centres across WA, and that's a price position against a yield. So what might happen in the Perth location at the minute in Metro is the other buyer profile here is the first home buyer that actually has saved a deposit. So they now get to go out and have maybe a few less people to compete with when they go to that home open, and when they put in their offer, they don't have the agent saying, look, I've got 10 offers. It's pretty much the same as the last one you looked at. Don't bother. What they now get an opportunity is maybe there's only 5 offers or 3 offers, and they can actually compete to get into a marketplace as well. Some of the statistics that we've analysed in Herronton White is essentially the construction loans that come in our front door. Let's just remember, if it's a construction loan, that's a customer that's leaving the back door of a new home builder, so one of our big builders like an ABN Group or someone like that. And essentially our volume that we can see that we analyse in Herronton White across those investors is March quarter of the year, they were at about 30% of new home activity It's down to 15% in July, in fact. And so we can see that's dropped away by half. I'd expect that that's going towards zero pretty quickly. Investors are probably not that interested in a new block and build proposition from an affordability point of view.
So it's affordability. It's also, I think, for investors, especially the ones that are spruiked from the East Coast, it's all about the yield story.
Yep.
Oh, go to Perth because your yield can be 5%. Don't worry about Sydney, it's 2.5%. I think as that value, as the package price goes up and the rents, as we can see, are probably capping right now based on affordability in the home, the yield story starts to become less compelling to the East Coast spruiker, and that's what they are. They're house and land spruikers, right? And so I think, you take a little bit of that competition, that pressure off. What it also talks to, though, is a little bit less pressure or a little bit less instigation pull on the creation of rentals.
Yes.
I mean, as much as I really don't like the East Coast spruikers, they do create house and land package rentals.
Yeah.
It's sort of like the foreign buyer sort of thing, right?
Yep. Yeah, well, they're doing the job of constructing supply into our market.
That's right. Well, if you're saying that investors from the East Coast are probably going to be less interested given less attractive yields in that house and land construction space, well, then that's one source of rentals going forward that is going to come off.
And just to give listeners an idea of what we're talking about on price points here, those investors came to our market and bought along, it's just an easy example, but bought along the north coast of Perth suburbs, so north of Joondalup right up to Yanchep, all of those suburbs along either side of Marmion Avenue. Their price proposition would have been about $550,000 as our market started to lift significantly. That same type of product now will cost you just under $800,000. At the same time, rents have gone from sitting around $550, $600 a week to rent one of those houses. They'd be topping out at about $700 a week now. So you can see the yield compression coming into that scenario. And most significantly, you can see an investor who was thinking about a $550 proposition now thinking about an $800,000 proposition is probably going to go and consider their options in between.
Well, further to that, when you think about the East Coast investor, we know they make less than us. As a state median, these are investors who have less money than us generally investing into WA.
Yep.
If the West Australian buyer is struggling to get to that price point, well, certainly the investor from Melbourne is struggling.
Yeah. So then we go back to some of the finance fundamentals that we can also talk about here in terms of where are interest rates, what's that cycle looking like, but most importantly, how's that cash flow funding going when the customer goes to the bank and says to them things like they get their HEMS assessed in terms of their loan application and they're sitting there going, oh, hang on, I can't spend $800. I came shopping at $550 and I've worked my way up to $600. I'm now at the price point that I can't afford anymore.
So if we go back to that metaphor, the clutch is the interest rate movement.
Yes. It seems like it's a weekly, daily subject out there in the marketplace. I'm not an economist, but I am following a couple of well-reputed ones. Guys like Stephen Koukoulas, the Kook, and Shane Oliver are both out there.
Smart men, pragmatic men.
And I think that's really significant. In particular, Shane Oliver, who's got a very conservative reputation, calling for a drop in interest rates pre-Christmas. Obviously, the RBA have got a position to uphold here.
They have a reputation to protect.
The political pressure on them in terms of, in particular, the federal government sitting there wanting cost of living pressure to go down, the easiest way that they can show the relief to all of their constituents is to see interest rates decrease.
We're the only country left in the OECD who hasn't started their dropping cycle, Brendo.
Yeah.
Everyone else has.
Yeah.
And so we were pretty much the last to lift, and let's not forget that. And that has historically been the case, that we track the rest of the world probably 6 to 9 months behind. So if we do see that first rate drop first quarter next year, it would line up with historical pricing movements.
Yes, I think that's something we all need to remember, that we were really slow in the uptake and we didn't peak out at the same types of interest rates that the rest of the world did.
Well, look to New Zealand, for example, similar market dynamics to us, and they're still 1% higher than us.
Yeah. And heading towards recession quite rapidly. Yeah. That comes back to the challenge that the RBA have got here, in particular the East Coast economy and again, in particular, Victoria and New South Wales. But
isn't that funny how we're talking always, especially with the RBA, about protecting against recession? And in Western Australia, we are so far from that being an issue that, it is going to be kerosene on the fire for us. The second, we don't need to be protected. We actually, as a state, don't need these interest rate drops.
Yep.
It's the rest of the country that need the interest rates drops from a cost of living component, and it won't come soon enough for them. For us, it will be the clutch releasing and going into third gear.
Yes, and so that's really important from a perspective of if you're a first home buyer, an upgrade buyer, someone out there trying to get into our market for good reasons, I would not stand back too long to assess and see what happens next. The second that we get a really definitive indication that interest rates are going down, which is most likely going to be first quarter next year, but there is still a chance that we go to November, December and have a Christmas with an interest rate drop on the way in. If the market sees that, I expect that we will see some really significant activity in Perth metro area, in particular for Perth locals that want to participate in our market.
Markets move on expectations.
Yep.
Before facts most of the time, right? And we saw that with Sydney, for example, when there was the expectation of interest rates starting to rise. Before that actually happened, the Sydney market started moderating.
Yep.
So I think we'll be in the same position where for everyone listening, this is your in right now.
Yep.
This is your opportunity. October, November, December.
Yes.
And as always over Christmas is an opportunity there.
Yep.
That if you are still on the sidelines, if you've been missing out, if you have been unsure, I am very confident this is your quarter to get yourself in this market before the frenzy, the kerosene starts.
Yes, and so
if it hasn't already been that.
So for perspective here, Trent, we still need to think about where the median house price is, and REIT numbers are around about $700,000. Now, this is getting towards peaks that we've had in the past, and I get that people get nervous about that. What we do need to think about is what Perth looks like now in comparison to when we peaked out in the previous cycle. So in that previous cycle, we were going through a mining construction boom. We had a lot of people living here. Essentially, we're here for a construction side of the economy.
A transient population.
And they were ready to go home. And there's an old stat that WA Treasury had that at the end of the last mining construction boom, somewhere in the order of 45,000 Kiwis went home from Perth. That's a huge number of people to move. And I
That's a couple of suburbs.
Yeah, exactly. I do remember doing Val's. I can remember a couple through Applecross, Ardross, and then through the western suburbs of Perth. And over and over, it was empty rentals of quite expensive property, and essentially it was engineers that had essentially just packed up the house and gone back overseas, whether it be back to Africa or back to Europe as a base to work on other projects around the world, or indeed into Asia. So that's not going to happen this time around, because let's just remember what's driving our economy at the minute, and that's the production side of the economy. We have a lot of people working in the mining industry. We have a lot of people, and this is really key to what happens here in our housing market, working on infrastructure projects that have made Perth a significantly better place to live into the future. In general, as we see those projects finish, we're actually seeing Perth as a more efficient place to live. The project down on elevating the railway line down in the southeast corridor on that Armidale line will significantly increase the efficiency of operating that southeast corridor, which are, it's just one example of some really good infrastructure projects that have taken place.
You talk about population growth. I think it will be probably this week that we tick over 3 million people.
Yeah, there's a huge number of people in terms of the growth plan.
That's the driver for the 800 to 900 properties a week that are being purchased.
Yeah.
Every single person that comes here needs somewhere to live. It's hard enough finding a rental. People want to be moving here to drop their roots, right?
Yep, absolutely.
When you think about 60,000 people a year coming in this year, they need about 25,000 homes. That's new properties.
Yes.
Not the ones they've already got.
Yeah.
Those are the realities that I think we're going to continue to struggle with when it comes to that dynamic of our growth going forward. It's a very different situation to the last time we were at this price point. As you said, last time at this price point, we were peaking on the way down.
Yep.
This time, we're literally in the middle of this cycle.
Yeah. And I'll just point your listeners back to the Tim Reardon HIA economist episode from a few weeks ago. If you haven't listened to that episode, I caught up with it last week. Tim talking through the supply side of things. This guy lives and breathes this. If you're in any doubt about what you and I are talking about with supply, we're still only building topping out at 15,000 dwellings per annum, and we need 25,000 at least. So it just shows you that undersupply will continue to be a problem in the Perth marketplace into the future.
Brendo, I've spoken enough about the market in general. I want to get a bit more specific. Let's tell some stories. We love stories, and let's go to the top of the market. Now, the interesting point about the top of the market is I've been of the opinion that really has been withheld everything from mill up, really. It's as much as it's still growing, it's been held back. The choker chain's been holding it back, being in the interest rates. We're still seeing prior to interest rates rise, and we know the smart money moves first, right? So these guys are doing it. What we're telling people is the opportunity at the top of the market with the best decision making, the most liquidity, the most accessibility to information and experts. They're doing this. Records are being broken right at the top of the market right now, even though rates haven't moved yet.
Yep. So really interesting trend. What we've found in this market cycle at the top end, it's really interesting to watch dynamics move. And so this dynamic at the top end of the market has been very much vendor driven. And by that I mean, essentially the vendors have sat on hero type properties, for want of a better description, and just waited for the market to come to their level of value. And we're seeing a number of examples through the western suburbs of $20+ million sales numbers. They're absolute records. And so we go back to January and February. We've talked about this on previous episodes. We're looking around over our shoulders going, where's the upper end of the market? What's going on here? Our valuers were getting valuations to do on multi-million-dollar properties through the western suburbs and essentially didn't have a lot of sales evidence to go on. So we didn't have new sales though. So 3-month and 6-month-old sales, that's what we rely on in terms of making our judgment calls on what something's worth. And I think back to January, we were struggling to get $3 to $5 million type sales numbers. Then all of a sudden from March forward, we end up with these $20 million sales popping up around the place. And essentially what I can see has happened here is the vendor has been talking to their agents. The agents have been really smart to get in under the pack and understand that the property might be ready to be transacted. And essentially those agents have then gone to the purchasers and said, look, I think there's a transaction here, but you're going to have to give me a number that blows the vendor out of the water to make this happen. And so hence we go really quickly from a property that probably, and this is brutal honesty from a valuer's point of view, we might have come and valued something at, say, $15 million. We might have been looking at some historical sales and making some really professional calls around where we think that stops. But then it goes to the market and it starts transacting between a willing buyer and a willing seller, the two components of market value as it's defined in our profession. And essentially the willing seller is saying, yeah, I'm willing to sell, but it's gonna take a fair bit more. So we end up with these $20 million offers, and the buyer essentially looks around and goes, well, at that level, I know that's relatively unique property and I'm going to have to pay that amount of money to get into the market. Some of these properties are substantial land holdings with older character dwellings on them. A couple of scenarios there that are upgrade type buyers, so they're local in Peppermint Grove and rebought in there to get their dream home, so to speak.
So we're talking Peppy Grove, anything Cottesloe, Mosman Park. These are the suburbs you need to be in for that price point.
Yeah, exactly. So Wellington Street up in Mosman Park, people would have seen that in the west. There was a big page splash on a $20+ million house. And interesting from our point of view that was a 10+ year old build, exceptional quality home that's been really well maintained. And then just these hero views. You look out the back of the property, you're looking at Fremantle and Rottnest, and you look out the front and you're looking at right across the Swan River. You're sitting up above Saunders Street there in Mosman Park. So that's been a really interesting situation to be in. So if we then work that down the market value range, and that's
smart
why
money moves first.
Exactly.
This is why we're saying it. The smart money moves first. These guys have the best decision making. They moved first in 2017 in Cottesloe. They're doing the same thing again now.
Yeah, spot on. And I'm not telling the stories to be a big shot, or I really want the listeners to get in here
and understand.
I'm not the buyer, no. But I do want the listeners to just think through how that works in their own price point. So if you're sitting at home going, I'm the upgrade buyer, and I'm on a property that's worth, say, $1 million to $1.5 million. And for better or worse, those are pretty common numbers in good suburbs across Perth now. If I want to get from $1 million to $1.5 million or $1.5 million to $2 million, then I need to be really active out there. I need to talk to local agents. I need to get realistic about what the value might be. And I need to understand the process in terms of where I'm going on my upgrade buyer journey. We're also seeing that right now with some of the transactions in this spring selling season. I'm thinking of what's come through our office in the last week or two in terms of off-market transactions at the, I'd say, $3.5 to $5.5 million range through the western suburbs. There's a lot happening in the background there.
This speaks to a conversation I was having at the pub with Craig Gasper a couple of weeks ago. He had just finished his Saturday morning telling me a couple of stories about what had been selling throughout the day. And I asked him the question, look, how's it going, Craig? Your suburb, Wembley, West Leederville, is the barometer, in my opinion, for most of Perth. It's the aspirational middle ground in Perth. And I was expecting him to say, yeah, we're still getting a couple of people, the transactions are happening, probably going to wait till interest rates drop. Half blocks, old houses, not great, now going at record prices in mid-2s. They would have been mid to low 1s before COVID. And that blew me away. And that really was some confidence that I got that in that aspirational middle ground in Perth, it is still happening.
Yes. And then there's another factor I'd like to add in here, Trent, because I think this is a generational change in our market. I'm not trying to be too dramatic there, but it's the generation that's actually making a decision, and that's the boomer type generation. So the upper end of that age group are now sitting around, and they're smart enough to see that they can take their principal place of residence wealth, cash it out as the market peaks here. So if you're a vendor and you're a little bit nervous about whether your property is going to maintain its value, or in fact you've sat there and watched it double over the last couple of years, then there's a couple of incentives for a boomer type age group to look at selling their principal place of residence. If they've owned it for more than 10 years, the two people that occupy that property or own that property can each take $300,000 and put it into their superannuation. So there's a huge incentive to transact there. I get the stamp duty debate. I was on 6PR recently. I mentioned stamp duty, not even really talking about that topic. Oh my God, the lines just light up. Everyone hates stamp duty, right?
The same thing on the Monday.
Yeah, and it's a really good excuse not to downsize, but I'd encourage those people that are looking around to downsize to actually have a look at their finances a little bit further. Now, back to the point about those people, for the first time I can see are having a real effect on our property market in terms of a sell side. So they've always had a really big effect on the buy side as they transacted property, did developments, created wealth, those types of ideas. Now they're going, okay, I'm ready to downsize, and that creates the supply that we've talked about as the missing link in our marketplace over the previous couple of years. We've always harped on about the fact that boomers didn't have anywhere to move. A couple of complexes of finished construction. You think about Civic Heart in South Perth, the Grove in Peppy Grove / Claremont. That creates some of that
That's
supply.
a few hundred houses.
Yeah, exactly. Civic Heart, off the top of my head, is about 350 apartments. The Grove's about 250. That's a lot of houses to come to the market, right? Yeah.
Walking through these apartments, you think about it at the time, but yeah, when you get the weekly data coming in, you're right. Not only have we finally finished about 20,000 homes from the building boom this year.
Yep.
We're not starting them that many, but we're finishing that many finally this year. We also have, you're right, this big flushing and recycling out of a material number of downsizers finally moving into these mega apartment buildings.
Yeah, and I think
right
Dave,
now.
Yeah, exactly. Dave Crest's number, I think, is 860 odd apartments finished so far this year. I would expect that that's a decent record for, in particular, if you look back over the last 3 or 4 years.
It's a blip on the radar, and it will be a lot less next year. We know that from what we're seeing.
Well, no one's
not
starting.
Coming out of the ground. Yeah, it's a mental stat to know that our goal is 47% of new properties being infill. We're currently approving 9%.
Yep. Yeah.
I know it's a rhetorical question. We've spoken about this before, but I still cannot figure out what the plan is for us to actually meet our supply targets.
Unfortunately, when I listen to Tim, when I listen to state government not having a crack at them, they are looking around going, how do we get skilled workforce into our marketplace? And we go back to one of the drivers of our local economy. We're really looking for students to come in and add to our economy because we've been undersupplied in comparison to the East Coast for students, and then skilled migration into WA. And there were some alarming stats from Tim Reid, and I was driving around with my eyebrows raised when he was talking about the fact that skilled migration doesn't really happen in between states, which is a massive letdown for WA. Clearly, we can rely on maybe the East Coast economy stalling further, and in particular, New Zealand economy stalling further, and hope that those tradies come out of those locations and into Perth looking for an opportunity, because we've still got jobs for them, right?
There's more Poms, there's more Irishmen.
Yeah, so you've got to then go overseas.
Yep.
And unfortunately for the WA government, we get a quota of how many people are allowed to come in. The federal government sets that quota.
And it's nowhere near enough.
And it just doesn't support our economy the way it needs to be. Yeah.
Brenda, I want to wrap this up by providing some practical advice to people on what to do with this information we've spoken about today, right? So I think we have some dot points. One, we feel like we're hitting a bit of an ebb, possibly a current capping of lower end, lower quartile prices on the fringes. It's getting to a point where it's about as expensive as I think you can get without interest rates dropping, which is not far away, but this is what the next 4 months represents for people. What do we think about that and what that looks like? And then given we know interest rates are about to drop soon, where is the capital going to go? Where do we want to be probably focusing on if we're looking to buy into a sub-market that's got growth potential?
A really interesting discussion around our office in terms of that affordability side of things. So the first part of the discussion came from rents, essentially valuers that are inspecting either rented property or vacant property, which obviously isn't that common, but essentially the property managers and the agents coming back to them saying, look, we think the rents are pretty much peaked out here. People can't afford to pay more than $600 to $700 per week. So then that puts pressure on the yield side of the equation. And then if we go to the bottom end of our market, say that $400,000 to $600,000 suburbs, in particular ones in the outer ring of Perth, you probably have to start thinking if the rents have peaked out, then that means the property values start to peak out really quickly.
Because the property value increase, a lot of that's come from the investor market.
Yeah, exactly. So the investors and demand drove up the price. The yield still looked really good. People would have got into some of those suburbs at $300,000 at the types of rents I just mentioned. Now people are getting in there at double that price, and so clearly the yield just doesn't look as attractive anymore. So that takes off the pressure. So
you would agree with what I was saying about a month ago on the podcast, that as we expect rates to go down, we expect the buyer pool to migrate up the amenity curve to places they'd rather be in the first place.
Yeah, exactly. And so there's also a little bit of the demand side of the equation at that bottom end of the market is leaving, i.e. that's those East Coast investors are not coming to our market anymore. So that creates slightly less demand. Little bit of supply will come into that side of the market because East Coast investors, if you've doubled the value of your property and you think that you've done your time of, say, 2 years, 3 years worth of investing in Perth, maybe you cash out and go to Darwin or Melbourne or Brisbane or something like that. So as a local, your opportunity becomes that upgrade buyer. You sell out of those opportunities or that price range and you move into that slightly better location where essentially the value's probably not going to fluctuate downward anytime soon. And what you need to do here is have that faith as a property buyer that we aren't going on a downside tear at any point in time because of the fundamentals we've talked about here. Exactly.
Prices only drop when supply is greater than demand.
Spot on. And so the supply is not coming to the market in those suburbs. And so I just wanted to give upgrade buyers, probably investors into good locations, the confidence that supply side isn't coming anytime soon and that demand will remain solid. Let's just remember what we talked about with interest rates so far through the pod as well. Yep.
Okay, so it's probably Middle Perth that we think is going to start getting the love again.
Yeah, absolutely. And so it's all been bubbling under. There will be some properties coming to the market in some good locations, and so they will have demand pressure on them. They'll be sought after. There'll be slightly more this spring probably than last spring, and that creates that opportunity for buyers to get into the marketplace.
Going back to the car again, we're revving at 8,000, I think, on a number of these properties in Middle Perth, and we're just not changing gears because most people are capped out in price points. That the second we get the clutch in, release it, revs drop, speed goes up.
Yes.
Right, so we're really releasing that Middle Perth, the second interest rates, because that's where people would rather be. It's where people really wish they could buy in Morley rather than Lockridge or whatever it is, right?
Yeah, so try and get that little bit closer to the city, closer to infrastructure, schools, shops, family, those types of things. You know, one of the great concepts out there in Perth is that family orientation. I've made money, equity on where I live. I can now afford to try and jump into the suburb that my mum and dad live in or the suburb next to it. Yeah.
Oh, good. I think we're starting to form a theme for next year, and it's going to be aspiration. This year was affordability. Next year, aspiration. Let's stick with that. I like that. We're learning along the way together.
I better go work out how to spell it, mate.
Brendo, thanks for your time, mate. We'll speak to you soon.
Cheers, Trent. Thank you.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!